broadcast is now starting. All attendees are in listen-only mode.
All right, everybody, we'll get rolling here today. Thank you all for attending. My name is Charles Heuring. I am the Chief Compliance Officer and Assistant VP of Marketing at IAMS Wealth Management, and I do appreciate all of you taking some time out of your mornings to listen to a little bit of what I have to say about kind of growing your business, and particularly in the route of kind of the wealth management advisory side of IAMS. So again, thank you for attending. Now, before I get rolling, I just want to let anyone who might be new to these type of webinars know that as I'm going along, I know I'll be kind of going pretty quick just because this is meant to be a high-level overview of what IAMS and IAMS Wealth has to offer. We usually do a similar presentation in about a 2-day span for our advisory meetings, so this is all going to be pretty high level. But if there's anything I briefly touch on that you want to know just a little bit more about or want me to clarify, you do have the question box, so feel free to type into that. I will touch on as many of the questions as I can towards the end of the webinar, so I will get to those. So if you have any questions there, feel free. Otherwise, this will be recorded, and our number is at the bottom of each slide, 888-255-7670. Our team here at IAMS can help you out in any way we can. We're happy to answer any questions you might have, and that number ensures you're going to talk to a live person during business hours. So with that said, I'll kind of get rolling here and talk about just kind of growing your business with IAMS and IAMS Wealth Management. So once we get through our kind of disclosures here, just to set the table, I understand we have probably a vast array of attendees on this webinar. Some might be new to the IAMS family in general. Some might know IAMS, but maybe they're not securities licensed. Some might know IAMS and are securities licensed. So I'm going to try to speak to a broad audience here. And with that, to start, we'll just talk about the IAMS family as a whole. The history of IAMS started 32 years ago with insurance agency marketing services, the FMO side with annuity and life products, the 3-ring guarantee, the full service marketing and operational support, submission to commission, and our number listed there. That's kind of where the service aspect of our industry started. About 2.5 years back, though, we kind of have seen the writing on the wall for quite a while that our contact base, our agents and advisors, could benefit from us adding an investment portion of IAMS, or a market investable asset portion of IAMS, and that's where IAMS Wealth Management came to be. So we are built on the same exact values that insurance agency marketing is. IAMS Wealth Management, we have the same 3-ring guarantee, we have the same full service support, and we're going to help you from proposal to payout. That's kind of our lingo here. Both of those numbers ensure you talk to a live person, like I said. So that at least just sets the table for the IAMS family as a whole. Usually the question I get after I explain the difference is, well, tell me more about IAMS Wealth Management. What are you guys? And I like to always kind of break down what we are, just because on the security side of the industry, there can be a little bit of confusion on what type of institution you are between, on this slide you can see, registered investment advisors, RIAAs, and broker-dealers, commonly referred to as BDs. So really, both give you the same access to work with securities. The only difference is kind of listed here. IAMS Wealth Management, we are an RIA. We are a registered investment advisor, and our primary function is investment advice. That's what we do. You do that in exchange for a fee on the accounts that you advise, the flat fee. You're not earning those commissions for the buying and selling transactions of securities. That's more of the broker-dealer side. Responsibility on the RIA side, that's a fiduciary responsibility. And for those of you that might be kind of new to that term, all that simply means is that you are obligated to act in a client's best interest. And as most of you listening know, 99% of the people in this industry are doing that already. Just because you aren't a fiduciary doesn't mean you're not acting in a client's best interest. But a unique thing about being part of an RIA is that's a label that's put on you. So it's a good marketing leverage point, and I'll touch on that in a little bit later. The broker-dealer side of the world is more held to a suitability standard, meaning if it's a fit, it can work, it's suitable. So that's the only difference there. Lastly is just the regulatory landscape. A lot of the people that me and my team talk with from the broker-dealer side, they're used to being under FINRA jurisdiction, having surprise audits at their office, the whole 9 yards in that regard. On the RIA side, we're SEC registered. We're federally registered in all 50 states. We're overseen by the Securities and Exchange Commission. So they oversee us as a firm, IAMS Wealth Management, and it is then our obligation to oversee our representatives and advisors. So that's kind of a brief rundown on the differences between the two. I always like to touch on what you need to, what type of licenses or designations you need to have in order to affiliate with a group like IAMS Wealth Management and RIAA. The most common way is a Series 65 exam. So I know some of you listening probably already have that exam. Some of you might already be with other RIAs. That's typically the most frequent way people affiliate with an RIA. That's a pretty simple test. I can touch on that more at the end if anyone wants to ask any particular questions regarding that. But that's the most frequent way. Otherwise, if anyone's listening out there that has maybe a Series 7 and a Series 66, a lot of times that can actually just translate over and register you in place of the 65. The last way that we've actually had some advisors register is based off a designation. So if you have a designation like a CFP or a CHFC, there's a few others out there. If you already have a designation, a lot of time that overtakes the need to take the 65 just because that designation is held to a higher standard than that test. So that can get you registered too. So I like to set the table with that too, just so you kind of know what the qualifications are to be affiliated with a group like IAMS, to offer some of the products and get some of the benefits that we're going to be talking about here. So as I go on, I'm going to tell you a little bit about our firm, kind of the purpose of why we're helping agents and advisors kind of grow their business, I guess the point of the webinar. And then the second half is really going to be just a brief synopsis of what IAMS Wealth Management is, what we offer in support, what we offer as products. And like I said at the beginning of the webinar, that's going to be very, very brief. But hopefully the rest of this kind of discussion might pique some people's interest and at least get you intrigued to think, hey, if it's a good fit for me, I'd like to hear more. So we're going to keep rolling on with that. So just an introduction to us as a whole. We started accepting business in May of 2017. Since then, we've grown to, I guess the slide says 38 advisors. Just this week, we added our 39th. So we're growing fast with advisor base. You can see we're located all across the country, so we can help you wherever you may be. We're currently sitting at just shy of 39 million of assets under advisement, and majority of that is coming from just organic growth of maybe insurance-first producers just going out, acquiring that Series 65, and adding it as kind of a tool to add more assets and build the value of their business. So that's mostly organic growth we've seen there. And just this year alone, it's about 194% growth. So we've seen a great 2018 so far. We look forward to wrapping up the year strong and starting 2019 on the same note there. But I always like to say too, for anyone I'm talking to, they say, well, what's the importance of being an advisor? What would I be giving to my clients? As we kind of segue into the next portion of the presentation, I always like to talk about this. The future ain't what it used to be. If anyone has any baseball interest, that's just a famous Yogi Berra quote. He's usually pretty good on one-liners and whatnot, but I think it kind of rings true in a weird enough way. Nowadays, the life expectancy in the U.S. is hovering around 80 years and growing. I mean, you can only imagine where that's going to be 20, 30 years down the road. And what does that mean for our industry? Well, in short, what does that mean for retirement planning? Your clients are going to be living longer. They need to plan out their projected income longer. Different suitability is going to be changing as people's living longer. So it's just a unique turn as the industry keeps progressing. Same goes for estate planning, tax planning, college planning. What is increased life expectancy going to mean for estate planning? Normally now, on occasion, there's, a great grandparents with their children, grandchildren, maybe great-grandchildren. What's it going to be like when 5, 6, even maybe 7 generations are alive at the same time? It's going to be even more important. And that kind of just snowballs into tax planning, college planning, everything like that. And the whole crux of this slide is really just to convey the point that, your client needs are evolving. The industry as a whole is evolving, and your business needs to as well. And that's why us as, IAMS, we evolved our business to add the IAMS Wealth Management component just to make us that one-stop shop for everything that our advisors and agents might need. We want to help empower anyone who's currently maybe a product-only agent to be that full-service advisor for their clients. That's kind of our end goal there. So with that said, we'll kind of roll into the purpose of the webinar, which is growing your business. What can IAMS Wealth Management do for you to help add value to what you're doing and build value for your practice? So going here, our 3 simple goals. I mean, I could list 20 goals for you if we had enough time, but I think the 3 primary goals for anyone affiliated with IAMS Wealth Management: 1, we want to help you build value for your business through increased revenue. And for those of you who might be product-only agents, you're used to just getting a commission for a product sale. On the RIA side of things, you're managing client assets year-round, and you're going to be earning recurring revenue on those managed money fees. So typically our advisors charge about 1% annually, and that's paid out in monthly fees. And our advisors love that because they're still doing their existing product business, but now they know they have a recurring revenue stream coming in month by month by month, which inevitably helps you during the down times that might be going through those slumps that even the best agents go through, or those times of years that might be slower, kind of like where we're sitting now in December. You're still going to be getting your fee revenue coming in, so it almost serves as a paycheck that can supplement the existing business you're already doing, and our current advisors absolutely love that. I think two and three arguably are the two most important goals. Is one, strengthening your client relationships. You're going to be viewed differently by your clients just because you are a fiduciary. Because you're a fee-based advisor, the only way you're going to make more on their managed money accounts is if the value of their account goes up. If the value of their account goes down, you get paid less. So you're really sitting on the same side of the table as your clients. They can understand that. They can interpret that. They actually visualize it because they understand that you are acting in their best interests, and they know that they have a one-stop shop for everything they need. And that kind of leads me into point number 3, which is just improved client retention. How many times have anyone listening maybe worked with a client who currently is working with a broker, and they're getting a second opinion based off of whatever product you might be talking about, or you're working with a prospect that comes in with a certain amount of money that they can't all put into an annuity, perhaps, and they need some of it to go in the market. Well, if you're not able to provide that service, they might look elsewhere, and that puts that whole relationship at risk. So when you're able to handle a full range of products and services, all that's going to do is improve your client retention and ultimately increase your referability, because you're going to be doing everything you need to do for your clients. You're going to be kind of what we like to call their CFO, their complete family office. And that's our goal for you as an advisor with IAMS Wealth Management. Going a step further with that, I always like to talk about us in a way that kind of makes us unique. Anyone can help you. Any securities related firm can help you with the goals on the previous page. I think our unique proposition is kind of this slide here, is that we're built to allow you to focus on your existing business while adding on this advisory side. I think we're more equipped to do that than a lot of other firms out there. Our platform simply creates another tool for you to gather more assets. It's not going to be an intricate day-to-day management on your end. A lot of that is put on our shoulders, and that's why we're here. We're here to help you with that type of stuff. The same goes for our systems. They're going to allow you to do all this without overhauling your day-to-day life. We're not going to be having daily calls at 8 a.m. where you need to let us know what you want to do to trade accounts, or you're not going to be having to call, various custodians to get money transferred over. All that stuff is going to be handled by our office here, just allowing you to be out there being that relationship manager and simply just having another tool to gather more assets. And the simplest way I can phrase this to anyone who might be new to this industry is just think of this as a new marketing program to reach more clients and retain others. I mean, how many of you right now can think of your existing client base that might benefit from you having services like this? You can always go back to those existing relationships. And that's what I tell all of our brand new advisors, saying, hey, if you're worried about kind of a lead base, I mean, you have all those existing relationships that you have currently. Why don't you go ahead, start your whole advisory business with a client letter out to every one of your existing clients, reintroduce yourself, reframe yourself as kind of that now full service advisor. Those people are going to be more than happy to meet with you just because you have those existing relationships. That's going to get you that positive momentum very early on as you can kind of roll out your new advisory side. So I always like to mention that too. And to actually put that into kind of a tangible slide, I always like talking about this one at any events we have, or even just with someone who is on the fence about getting securities licensed. If there's going to be one thing as someone who might not be securities licensed takes from this presentation, I think this is your slide, just because hopefully this really conveys the value of being securities licensed. And I've listed 5 hypothetical appointments here. These are all appointments I've helped our advisors with over the course of the last year and a half. And they've all told me that being securities licensed has helped them be more equipped to handle these appointments. So I'll kind of go through these and hopefully it kind of speaks for itself. So let's say you have appointment number 1. It's a $75,000 prospect, pretty good annuity candidate. As an agent, you can make the sale. You're going to make a $75,000 annuity sale. Great appointment. As an advisor, nothing's really going to change. Assuming they have other liquid assets, they don't need to be in the market. I mean, you're still going to write that same exact annuity you were going to write anyway, but now you're able to just have more conversations, build a concrete relationship with that prospect, and either way, you're writing $75,000 annuity premium. Now, where the road starts to split a little bit is in appointment 2. You get a $1.2 million prospect, a big fish client that, might be a friend of a friend or a friend of an existing client. You talk to them as an agent. Well, you have a great conversation about a good product. You propose that, maybe 600,000 goes into an annuity, but they're talking to a Edward Jones broker who might be able to get them that same annuity, but could also get them in the market. So they say, thanks, I appreciate your time, but I'm actually going to go elsewhere with someone who can full service my needs. Well, as an advisor, you're able to help them on both sides of the fence. You can get that product sale done, but you can also manage those market assets that they want to keep liquid or maybe see more appreciated growth with. That allows you to get both sides of the benefit there. Same goes as you roll into appointment 3. A $300,000 prospect, a great referral. You can't put it all into the annuity just because they need to have a little bit liquid there. Still not a bad annuity sale. You're doing your job as an agent there, but as an advisor, same goes for the previous appointment. You're able to help them on both sides of the fence, and that rings true as the appointments keep rolling on. Another example, we had one of our advisors mention this the first month they were with us. They had a long-time annuity client pass away. They inherited about $100,000. As an agent, they didn't end up getting an annuity sale because the child was in their early 30s. They didn't want to buy an annuity. But because he was a securities license, he was able to roll over that account into the security side, put it with our custodian at TD Ameritrade, bridge that gap from his existing client to the next generation, and keep that relationship in the family. So that's just a huge, huge way of increasing the retention of your business. And then lastly, appointment 5. You're just doing a regular review with a longtime client. Everything looks good for them. They don't have any more assets they might want to go into an annuity, but they thank you for your time. As an advisor, though, you find out, through going through their statements, they have $50,000 they're self-managing on a retail account at TD Ameritrade. Well, now you're able to pull that under management, provide better service for them, and do that all under one house. So on either way, you're having a good string of 5 appointments. But when you're looking at it from both sides of the fence, all being securities licensed is going to do is actually increase the existing business that you're already doing just because you have more capabilities, more referability, and it's going to allow you to pick up more assets on the other side that you wouldn't be able to get before. So hopefully this speaks volumes to really the core benefit of being a fiduciary advisor is you have more capabilities, you have more responsibility to your client, but all that does in turn is increase your referability, increase your marketability, and allow you to build your business. So I always like to talk about this with anyone who I have a chance to. So hopefully I didn't speed through that so fast. If any questions you have or want me to touch anything again, feel free to chime in. But I'll kind of keep rolling along here now once we have the core of why we're doing what we're doing and why we think we're a good benefit out there to an insurance agent who wants to start with us or an existing advisor who wants to move to us. We'll talk a little bit about just IAMS Wealth Management and overview as a whole of our firm, briefly run through some of the capabilities, a little bit on our platform, and then we'll be done here today. So the IAMS Wealth Management overview. Brief synopsis of some of the systems that we have. On the business side, everything that you're going to be supplied with as an advisor with IAMS Wealth Management. Well, one, it all starts with our proposal generation software. We utilize Advisor World. They help us recommend a best fit portfolio and through a risk questionnaire. So it's nothing new, nothing brand new, revolutionary, but it's still just the tried and true risk questionnaire that at least lets your conversation start with a compliant fiduciary risk-based point. And that allows you to pivot that conversation from there. But you don't have to worry about being a newbie to the advisory landscape. How do I know what to recommend? Our proposal software running through our home office is going to help you do that. So that's Advisor World there. Elements is a proprietary business processing tool that we have through one of our institutional partners. It's really helped us in the last 12 months. It's been a big part of that growth we've seen in the last 12 months, just because it's one cohesive business management tool instead of having your various logins elsewhere. It integrates with about anything you could ever want on the advisory side. For someone new to this, that might be overwhelming, but for someone who's been doing this for a while, this Elements, if you utilize a CRM like Salesforce or Redtail, it integrates right in with it. Our reporting software that we utilize for managing client accounts, running reports, that all integrates right in with this. Same goes for our document storage. We retain documents electronically through the cloud. That all integrates with this. So instead of having a sheet of 8 different accounts with 8 different passwords that you have to pick and choose through different tabs on your computer now, through IAMS Wealth Management and the Elements software, you have it all in one place. So all it's going to do is maximize your time, make you more efficient. And we know that the more efficient you are, the more people you can meet with. And the more people you can meet with, your business is just going to grow. So we really love having that tool at our disposal. As far as client-facing systems go, this is a big thing that our existing advisors like to rely on. It starts on one with a compliant website. As an advisor with us, we believe that a website is imperative for anyone in this business nowadays. It's complimentary as part of your advisor package with IAMS Wealth Management, and it acts as your online storefront. Because the first thing nowadays is you start working with investment advice and start maybe pulling your age demographic a little bit lower now that you have some of those liquid assets at your disposal. You're going to get more and more into the people that want to maybe do some due diligence on you, that might want to say, hey, that guy seemed like a great guy. Let me go check out his website. Well, if they type you into Google and there's nothing to be found, odds are they might not return that call or want to make that second appointment. So we like to provide our advisors with a website just because we think it is very key. On that website, your clients actually have a means to log in and see how their accounts are doing with you through your Orion account portal. And that's a really neat tool just because, one, it gives you the structure of, one of the big, large custodians or big, large business entities that might be managing assets, even though you might only be a 1, 2, 3 person shop. So it helps build credibility there. It's neat because it actually can be on a mobile app. If your clients are tech savvy and want that, they can set up text alerts that could send them every Monday morning at 9 a.m. their account value, so they're not having to worry about their custodian statement coming through or calling you every week to get an updated value. All that's going to be at their fingertips. And to go a step further, the balance sheet factor of the portal actually can be a comprehensive portfolio, meaning if they have $50,000 with you as an advisor, but they have also a $50,000 annuity with you, or they have $10,000 in the bank, or they have a house they want to log into their net worth, all that can be put into the balance sheet, which I'm going to show you here. And this is just a sample balance sheet I went through and made, looking here just through the assets. If the client keeps $900 in cash, they log that in here as a fixed asset. If they want to link in outside accounts like an HSA account, a 401k, maybe a self-directed custodial account that they don't want to have managed through you, all of that can still be linked in here, even if you're not technically the advisor on it. And this is just going to give clients a unique tool where they can log into one place and get a snapshot of their net worth that's updated daily. And that's a really unique feature and a unique value proposition that you bring to the table as an advisor. And this is something that can help differentiate you. So as you see it here, it's branded with the IAMS Wealth Management logo, and my headshot's currently on the page. But when you're an advisor with IAMS Wealth, this is all branded for you. So it's your logo, your color scheme, your contact information. It really solidifies you as their go-to resource. And if, a week or 2 weeks like we're having currently where the market's been a little shaky and they're coming on here and logging in every single day, as an advisor, you can be alerted to that and you can say, man, Nancy's logged in usually once a month, and in the past 2 weeks she's logged in 10 times. Maybe I should give her a call. She seems like she's a little maybe antsy or nervous, so that's just another way for you to be proactive. So again, I could go on and on about this. This is the fun stuff I like talking about. For the sake of time, I'll move on. But if you'd like to see this in a real-time demo anytime, check in with me, call the number below. We're more than happy to show you that. As far as the support goes, anyone who knows the IAMS family knows that we are built on support. That's kind of our bread and butter. I know every firm is going to say they have great support, but hopefully our actions speak for themselves with anyone who's had an existing relationship with us. We'll start on the marketing side. We have a full service marketing team here that's at your disposal, an advisor. That's no additional cost to have them rebrand something you want with your logo on it, or if you want to use some of the 10 pre-built marketing pieces we have, we can do that all here in-house. And it's nice because our marketing team in-house allows us to get these marketing pieces turned out to you faster just because it's already in-house, so it's already going to go through compliance. You're not working with an outside group that needs to send materials to us. We send revisions back to the outside group who then has to get them okayed by you. It really just simplifies the process, and we love having that in-house. So if you have a chance to talk with Jacob or Sean over on our creative team, they have been wonderful resources to our advisors so far. Moving on to our advisor services, if anyone's had a chance to work with Joan Wallace, be it her answering the phone and you might be calling in regarding annuities, or if you're an existing advisor who might be talk with her regarding some of the services she provides, she has been instrumental in helping us build our production this last year too, just because of the quality of work she does, helping your business get processed as an advisor. So we like to say, if you can get us a completed risk questionnaire and a client statement by 11 a.m., we'll have a proposal and paperwork back to you ready that same day for a client appointment. So once you get those signatures and you make the sale with the client, if you get that back to us, we're going to be monitoring that every single day until it goes through. And the nice thing, I mean, we had an advisor a couple months back who was overseas on a 2-week vacation. By having us as their back office, his business didn't halt just because he wanted to take a 2-week trip that he had been planning for a few years with his family. We stayed on the ball with any things we could handle. If there was a couple things that needed the advisor's attention, we'd get 2 or 3 things together, reach out to him every couple days and just say, hey, we just need to knock this out. Really help streamline business, and that's what we're here for. We're meant to be your business partner. So if you are a 1 or 2 man shop and you don't have time to be handling tedious back office work, that's what we're here for. That's the service we provide. Moving on to rebalance portfolios. I talked about this briefly earlier, and I'll touch on our platform just a little bit here at the end. But it's nice because if you're an insurance-first advisor who maybe doesn't want to be dealing with the investing side of the day-to-day operations of the account, we have our institutional money managers that we can model into portfolios for you. Every proposal can flow through our home office, so you have peace of mind knowing it's a compliant proposal. But on the back end, those managers are going to be recommending trade allocations and rebalances monthly and quarterly. So all that happens without you needing to actually lift a finger or wake up at 6 a.m. and study all the market charts and get brushed up on everything. Obviously it's still good to stay up to date with current events and kind of know the general trends of the market, but you're not ultimately going to be the one making the buys and sells and changes of ticker symbols in the client accounts. That's what you employ the institutional money managers to do, and that's what you have through IAMS Wealth Management. So a lot of our existing advisors love that because it allows them to really be that business manager. They don't have to worry about being a portfolio manager. And lastly, billing. I mentioned this already, but we facilitate all the billing for our advisors. That's done on a monthly basis. I know a lot of people we've brought over from other firms are used to being paid quarterly. We like doing it on a monthly basis because it does give you that steady revenue stream. Plus, it allows the clients to see a little bit on every statement instead of an occasional chunk here and there. Because all it's going to do is make them understand the fees coming out monthly. They understand the value that they're getting from you. And it's all done consistently instead of sporadically. And we found that to be the better option for us. Continuing on that support, obviously we're not expecting someone to say, hey, I want to join IAMS Wealth Management. They study for the Series 65 pass, and we hand them the keys to everything and say, hey, go do it. Now we're going to train you too. So we have quarterly advisor training events, and every new advisor is required from compliance purposes to attend one. So it's either at our home office here or maybe at a spot event across the country, maybe regionally. But you're going to come to an event within your first 3 to 6 months of being an advisor with us. And all it's going to do is allow you to start at a level playing field. So that way you have at least some semblance of knowing kind of what you're going to do. And then the first couple appointments, I don't like using the word hand-holding because everyone here is well qualified to be doing this, but we will hand-hold you through the first few appointments just because talking about investments or a new topic in general can be intimidating. We want to take as much of that off your plate as we can. And I've even helped personally on some client calls the first couple appointments with advisors. Whatever we can do to give you peace of mind with what you're doing, we're going to go the extra mile to do it. Beyond those training events, we do have training videos and one-on-one follow-up sessions. So in the Elements technology I mentioned earlier, there's a 10-part training series on how to learn everything. If you call me one day and say, hey, can someone on your team show me how to use the client portal? You mentioned it on that one webinar and it seemed really nice, but I don't know how to get my client set up. We can set up a 20, 30-minute go-to meeting, and I can give you a one-on-one session on how to do that. That's what we spend our day doing. That's our purpose. We want to help you grow your business. So we're always available to help do that. And lastly, as good as trying to make IAMS Wealth Management sound, you do have multiple resources. So it's not just us here in the Omaha home office. You obviously have access to our team anytime you need it, but you have access to our key partners, meaning the Fusion team, Advisory World's team, Orion's team, our reporting software. So if you need a product specialist for something that might be going wrong or something you want advanced training in, our network expands beyond our 4 walls. We can get you in touch with a lot of different resources, so you're definitely not on an island there. So that's kind of just a brief synopsis of kind of our business processes. I do see some questions coming in, so I appreciate those. For the sake of time, I'll touch on those at the end. But moving forward, I just want to give a brief overview on kind of our platform that I briefly mentioned. And I think it's pretty unique what we've built here. So anytime I start the platform discussion, I always like to start with the phrase, people make emotional decisions. And the famous quote here from Warren Buffett, be fearful when others are greedy and greedy when others are fearful. Just because there's an inherent, I guess, natural feeling to kind of let emotion invade investing. And that's not surprising. That's how it always has been, but it's hard to avoid. And studies show continuously that when you allow emotion to get into investing, it's going to hurt long-term performance. Here, I like to always say, generally speaking, investors are loss averse rather than risk averse. If you've ever talked with even of your colleagues as you're maybe out getting a drink or having coffee, if they're talking about a good year for the market, they say, oh, I'm up 8% or I'm up 12%, 20% this year. It's always percentages usually when they're talking about market appreciation. But when the market's going down, they say, man, I'm down 5,000 this year, or I'm down 2,000 this quarter. It's always that loss aspect, what money they don't have anymore. And it's always funny because it's relative when you're talking in tangible numbers. If we have a client of yours that might call in and say, hey, my account's down $1,000 this month, what's going on? Well, if it's a $200,000 account, $1,000 is kind of natural in the natural variance of the market. Now, if you have a $5,000 client calling in saying my account's down $1,000, that's a totally different story. So you always got to put it in the context of what you're doing. And I think a lot of times, just the general public, it's hard to make that connection sometimes. And that's where kind of this graph comes into play. This is a Morningstar graph. I like the quote, in investing, what is comfortable is rarely profitable. It's not atypical for people to invest during the excitement and thrill stages you're seeing here, and maybe sell during the anxiety and fear stage, and then buy back in at the excitement and thrill. And all you're doing is just kind of timing the market, hoping that you're making good choices that are going to be good for your bottom line. And what we've tried to do here is build a portfolio and a platform that's built to succeed in both those up and down markets. So that's kind of where I'm getting to. And just because investors see volatility as the enemy, I don't think this comes as any surprise to anyone, no matter if you're in the investment side or have been, or if you're just simply a product salesman who wants to talk about annuities and fixed rates. Usually with the clientele that our advisors and agents work with, volatility is the enemy, just because they're typically retirement age. They want to be knowing where their money's going to be 3, 5, 10 years down the road, and volatility is usually seen as the enemy in that. The thing I like to always talk about when someone might call in and just say, hey, do you ever go to cash? Or, if the market goes down 1% 3 days in a row, will you ever go to cash? The hard thing about when you're trying to time the market is you're forcing yourself to make 2 correct decisions in a row. When do I sell? Am I selling at the right time? And when do I buy? Am I buying at the right time? And if you're doing that over the course of time, odds are those decisions aren't going to level out over time historically. We believe that the wiser course of action is to review your plan with any of your clients and decide if action is necessary, whether they want to go for more exposure or less exposure. That's usually a better conversation to have than to actually try to time the market and jump in and out. Because you can see historically, calendar year returns versus intra-year declines. I think if you averaged out all the intra-year declines, it's somewhere around 14%. But when you're looking at the calendar year returns, you can see, let's just pick, I guess, any one of these for an example. A year like 99, 2000, the biggest intra-year decline was about 12%, but the calendar return ended up about 20%. So if you're trying to buy and sell at random intervals during that year, who knows what you're going to be doing, but we tried to build a cohesive plan that's built to do long-term what we're trying to do, and that's avoid emotion in investing. A fact I always like to talk about too is that I think clients, even though they understand volatility, they might not understand how frequent it plays a major role in their portfolios. So as you're sitting here, think to yourself, and we do this at all of our events, but think to yourself and from your client's shoes, how often a 5% drawdown occurs. And usually when we're talking with clients, they might be guessing, every year, let's say every 12 months, a 5% drawdown occurs. Well, over the history of the market, it's about every 3.3 months. So it's not atypical to see 3 to 4, 5% drawdowns every year, which is what we've actually seen so far in 2018. But in the context of recent history, it's extremely rare. So I think the past few years have given clients maybe a muddled view of how frequent volatility can play a role. And that just rings true when you go to 10% or 20% drawdown. I mean, if you're looking with a client and you say every year and a half, you're going to be seeing 10% drawdown, I think a lot of them will be shocked, especially when you start thinking about in the context of maybe a $250,000 portfolio when you're seeing that drawdown. And so not trying to hammer through drawdown and volatility, but I'm just trying to let you know that our advisors currently out there in the field see volatility as kind of their biggest object when they're talking with clients. So that's why we built a platform that can help tolerate some of this volatility. So what we set out to do is develop a platform that can complement insurance business. We don't want to give a bunch of agents and advisors out there who are predominantly meeting with 50, 60, 70-year-old clients a platform purely built for nothing but growth and appreciation. That's not what we want to do. We wanted to build a platform that could complement everyone's particular need, no matter if you have a growth mindset or a preservation mindset. We wanted to develop a platform that won't overhaul an advisor's existing business. I talked about that lengthily a couple slides back, so I won't touch on that too much more. I think a key point is that we wanted to develop a platform that is simple at its core, yet able to be built out, and I'll touch on that in here in just a second, and develop a platform that implements a consistent plan. And that's what I was just referencing the past 3 or 4 slides, is knowing that no matter if the market's going bangbusters up, going down, or going a little bit sideways, there's a consistent plan over time that we see is if we follow the same set of rules over full market cycles, that's going to allow you to be giving yourself the best chance of success. So we'll talk about that here now. So our platform, one, focuses on a suitable risk allocation. That starts with that risk questionnaire I talked about earlier. All that's going to do is allow the clients to understand their risk level, so that way they can get pinpointed to an investment that they're comfortable with and understand. Even if their risk level comes up as, pretty conservative and they should be, maybe mostly fixed income rather than equities, but you're talking with them and their goal for a particular account is maybe just to appreciate in value and pass on to their beneficiaries. You can always change the risk allocation, but the process always starts with a risk-based profile to meet that specific client's needs. So it's nice from the very onset, it's designed to meet their needs. Secondly, there's a focus on an investment process. Our strategies do utilize rules-based algorithms to eliminate emotions, which we like just because we're never going to get too overreactive or too underreactive just because we're biased one way or the other. And I just like it because no one here on our team is deciding, I'm not here staying late on a Friday night deciding what 4 stocks we want to go in for the next week, and our advisors aren't having to tinker with their client accounts every first Tuesday of the month to do a rebalance. We rely on institutional money managers to do that follow consistent algorithms. So there's no human element to the decision. It's all based on consistent, reliable data. Whereas if the market's in our favor, we'll fully invest and try to participate in all that upside that we can. But if a week or two, like the past couple of weeks we've seen, have been coming about and the general trend is starting to seem like the market's weakening, not saying that that's what's happening. We don't know that at this point, but I'm just saying through a time like maybe 2008, that was a long-term recession, these strategies picked up on the weak trends, invested fully into short-term treasuries, and didn't feel that big bottoming out pit of a 40, 50% drawdown like the S&P did. Historically, back-tested data, we're close to about remaining zero just because of that ability to allocate defensively. So I can talk more about that at length if anyone wants to have more one-off conversations. And then lastly, risk-adjusted performance. All that's meant to do is just saying that we're just going to set level expectations from day one. There's no worse way for you to ruin a client relationship than by over-promising and under-delivering. I think everyone knows that at this point. All we're trying to do is make sure that the profile they fit to, they understand the upside that could be possible, the downside that could be possible, all within reason, knowing that extremes are possible either way. But all it's going to do is allow them to know that we could hit this on the upside, we could hit this on the downside. Along the way, there's going to be statements you get that might have a positive number. There might be statements you get that have a negative number. But based off the goals that you're talking about with them, whether they have a short-term goal, long-term goal, appreciation, conservation, whatever that might be, setting those achievable risk level expectations from day one, I think is a huge boon to your business and can help you manage those relationships down the road for long-term retention. So briefly describing how our platform works at its simplest form, our core platform is simply 10 profiles that consist of 2 of our core strategies, meaning domestic equity and fixed income. So moving on to the next slide here, this kind of pictures it a little bit easier to envision. Starting at profile 1, that's predominantly maybe a conservation mindset, short-term mindset. You want to be predominantly in fixed income. That's going to be 90% in fixed income, about 10% in equities. And as you span the spectrum going up in profile, going up in risk, you can see the allocation just flips more and more toward the equity side, towards the growth-minded side. And this is how we've meant to build it from day one, because this is pretty simple for an advisor to master. It's simple to explain. It's easier for a client to understand. And I would say about 80 to 90% of our existing clients are in something this simple. And I'm not trying to make it seem simple and make it seem like it's not good enough for a client. I think it's exactly what majority of clients need, just because it's not atypical for us to see, maybe a statement from a broker that has 30 different holdings. These strategies typically invest in anywhere between 5 and 8 holdings. It's just a simple, achievable investment goal to explain to clients. It's an easy way for them to understand it. It's an easy way for them to buy into it. And here we set the achievable kind of risk expectations there, where if you're in a profile 1, it's not atypical to think after fees you can get about 4% each year with your liquid money that's meant to be more conservation minded. And as you can see, those numbers go up as you start to take more and more risk. And again, these are target returns. I mean, I'm just using this as a hypothetical example. Obviously, there's going to be years that can be significantly better. There's going to be years that can be significantly worse. But over time, this is kind of what our achievable, realistic goals are on a year-to-year basis for those profiles. Now, I know for anyone who might be currently securities licensed, thinking, okay, I get what you're talking about, the core profile, but what more can I do to kind of build on nuts and bolts for my sophisticated clients, my high net worth clients, maybe an engineer who has a better understanding of the market and wants a little bit more exposure than just a simple two-piece pie dynamic. Well, that's where our satellite allocations come into play. And this is the remaining maybe 10 to 20% of our clients out there have some sort of satellite objective allocation that fits nicely in as kind of a third piece of the pie to any of those 10 allocations we have above. So whether you're looking at maybe a safety allocation, that could also be, a fixed index annuity for something that's more preservation minded. Income satellite allocation, maybe just a couple dividend paying stocks that you want to throw in to a profile 2 to add in some repeat dividend revenue. That's something you can do. If someone wants a growth of capital objective, if they want to put 5 or 10% of their money into high risk but high reward stock, that's more for your profile 7, 8, 9, 10. That's something our advisors have the capabilities to do. Real estate, I'm going to do just a brief synopsis of a real estate partner we have here in a second, but that's another component you can add in. A lot of our advisors are starting to do that more and more, just because it's a neat way just to add an additional, I guess, marketability point onto your profiles, just because they're likely not hearing a convenient real estate story from anyone else they're working with. So it's, I think, a diversifier for our advisors. Same goes for tax minimization. If you have clients that have tax concerns, you can go about throwing in a tax minimized sleeve for maybe municipal bonds, things of that nature that are going to inherently kind of lower the taxable elements to the profile. So again, I'm just speeding through this. I know that this is probably just a high-level overview. There's more questions rolling in, which I appreciate. We do have webinars out there just specifically on our platform that are about 45 minutes long that will dive into the underlying rules behind how we trade, a little bit more into our satellite allocations. And again, if you want to call into the number below and actually talk with our team, we can get a little bit more into the weeds on items, but I'm just trying, again, today just to give a high-level overview. But all this results in is if you have a sophisticated couple here, their risk score comes out to be a profile 6. All that is about 60% in our domestic equity strategy, 40% in our fixed income strategy. They have kind of an underlying holding in real estate and appeal to real estate. Well, you can go ahead and slide in about 10% in that real estate option I'm going to be talking about here in a second. Now that couple has a customized allocation that's built for them. It's going to be rebalanced on a monthly basis, and you as an advisor are not having to worry about lifting a finger. From there on, your responsibility is just to stay in contact with your clients. I'd recommend even using some sort of newsletter service just to stay in contact. You need to have annual reviews at least once a year. I don't think there's any harm in doing that more often. I think that's probably preferred. But you need to schedule those reviews, and all that's going to do is allow them to know that you're not just there to see them once, get them in an investment, and you're gone. You're that steady voice that's meant to be, what I said earlier, their complete family office, that CFO. So as I go in here before I close, I did just want to highlight that one manager I mentioned. We have had a relationship with Black Creek Capital for about a year now, and we like to phrase them as the gateway to private core real estate. A lot of our advisors like this because it's kind of the real estate exposure that a lot of those high dollar pension funds out there or endowment funds for universities have access to. If you look at any of those breakdowns of investments, any institution out there is typically going to have about 10% allocated to real estate. But unfortunately, up until just recently, majority of clients haven't had capabilities to get that same exposure. And if you look at this graph here, in market capitalization, commercial real estate's the third biggest sector. So behind equities and treasuries, it's even ahead of corporate bonds and municipal bonds, but it's predominantly still not in the everyday client's portfolio. So this is a unique thing you can offer clients. For a month like we've had here with a lot of volatility in the market, a lot of our advisors like the story that it has low market correlation. So if you put a client into one of our profiles, but keep about 20% into this real estate product we have through Black Creek Capital, you have that 20% that isn't going to be tracking that same type of index that they might be seeing, scaring them on the evening news. They see a market going drastically up or drastically down. That's kind of your steady Eddie option where you can say, hey, just remember you have this piece of your portfolio that's not designed to mimic the market. It's completely different. That's going to be kind of your sweet spot, and I think it's going to make your conversation easier during downtime. So I like to reference that. And studies do show that, the standard 60-40 portfolio that a lot of people know about, that's maybe 60% equities, 40% in fixed income. If you throw in a 10% piece of the pie being core real estate, taking 5% from each side of the pie, historically performance is a little bit better and volatility is a little bit lower. That's no guarantee it's going to continue to be that way in the future. I definitely like to say that, but it just goes to show the value that something like this can provide beyond just the marketability perspective. So that's just a high-level overview on Black Creek. We have a 20 or 30-minute webinar just on them alone too, so I'm more than happy to get you more information if you'd like on that. But before we wind down here and go to questions, I did just want to mention one of our training events that we do have coming up. For anyone who is currently studying for a Series 65 or may want to start pursuing that now after seeing this webinar, your first training opportunity is going to be in late January, the 24th and 25th. We're actually going to be hosting this event in Dallas, Texas. So if you'd like more information or want to inquire about attending, we do have limited spots, but there are still some spots available. So feel free to chime in. Obviously, priority goes to existing advisors. But if you're someone who's recently passed the test and wants to register, or you're someone currently with another firm who just wants to come meet our team a little bit, meet some of our partners and see what we're about, feel free to touch base too, and we'd love to have you in attendance there. With that said, I'm going to open the floor up to questions. I think we have about 6 or 7 here. I'll try to get to as many as I can. The first one is in regards to, as I'm reading here, licensing. So I think this kind of goes back to one of the early slides I was talking about. So to deal with IAMS Wealth Management, to work with any RIA, you're going to need a Series 65 license. And that's just a securities license. It's just a securities investment kind of law exam. It allows you the capability to offer investment advice for a fee, which is kind of the crux of what we're doing here at IAMS Wealth Management. So the Series 65 is predominantly the way people go. As far as timing goes, the question kind of goes on how long does the exam take? It really just depends on how efficient you want to be in studying. We recommend anyone who's been in the business a while, you're going to obviously have a base knowledge of the industry. If you have a pretty good base of knowledge in the industry, I'd say 40 to 50 hours of diligent studying can probably get the job done for you. I would recommend not trying to span that over more than maybe a month to a month and a half, just because if you're spreading yourself that thin over even more time, everything you learn at the beginning is going to start to get a little murky. It's better for you just to maybe set aside 2 to 3 diligent weeks, and I know that's a sacrifice to your existing business. But hey, as we're sitting here in early December, this might not be a bad time to set aside time to add value to your business, get that license, and hit 2019 running with an exam like that. And a perk I always like to mention to advisors is there's no real continuing education with that. Once you have a Series 65 license, it's yours unless you resign from a firm and let that license lapse. So I like to say that someone else is even chiming in saying it's not a difficult exam. So you see, your peers are even saying it. It's I know it's daunting for anyone who's thinking about it, but if that's your biggest hindrance to growing your business, I think that's something you can easily wrap your head around. And if we're talking again on December 6th, 2019, I think you'll be very happy that you made the decision. So I'll just kind of leave that at that. Outside of the 65, I did mention if you currently have a 7 and 66, traditionally that's with a broker dealer. If you've ever thought about maybe going only fee-based, leaving kind of the FINRA jurisdiction of compliance, getting into something that's a little bit more SEC regulated, but a little bit more flexible in terms of fiduciary aspect and some of the capabilities you can do. I'd like to just let you know that you can register with that too. So keep that in mind, as well as if you're listening and think, oh man, I'm a CFP. I had no idea that I could go ahead and register as an investment advisor without taking the 65. You can. If you have a CFP or a CHFC in majority of states that I know of, you can go ahead and just register with that designation as kind of your prerequisite. So I like to mention that too. Going through here, I see some other questions that I think I'll just follow up with one-on-one, which is good. I appreciate some of that feedback. Again, another person asking about compliance. I think I touched on that a little bit. More people asking about some of those satellite allocations. So in regards to the satellite allocations, those can be client-directed, meaning let's say you have a client who walks in the door with $100,000 and they want you to manage their money. They love the idea of profile 7 that you present to them, but they have, $20,000 in forward stock they inherited from their father and they don't want to touch. You're not going to be forced to loop that into a portfolio. You can link that in as kind of a monitored sleeve where we'll only trade the other 80% of the portfolio in that profile. And that way the client's needs being met. Similar goes for scenarios where that situation happens, but maybe there's a big capital gains liability sitting there where if a client liquidates a certain percentage of their account, they're going to get hit with significant taxable gains, and they just want to end up passing that along to their beneficiaries at the end of their lives with a step-up valuation. That's a way we can go about and leave that in a sleeve that's more client-directed based off of kind of what they want and you as an advisor know is in their best interests. A couple of questions have trickled in regarding specific satellite holdings. There is the ability currently for an advisor to propose individual holding in addition to our profiles. We try to limit that as much as possible, but obviously on a case-by-case basis, we're all ears, especially because we know a lot of our advisors spanning different experience levels. So someone brand new to this, one, I don't think you'll be even really asking those type of questions, but we'll probably keep you on more the compliant, easy does it path just to make sure we're getting you running on the great path. But if you're someone who's currently managing a book of business elsewhere and has experience, there's no reason why we can't talk with our investment committee and get you a little bit more access to doing some of your own directed trading. We are in the process of developing an advanced trading tool for advisors that meet kind of that enhanced qualifications that I was kind of alluding to, where they can actually go in and do direct trading on their own accounts. Now, I don't want to speak too early. That's a Q1 thing we're going to be developing starting in January, which we're excited about, but we'll get down that road when we can. And I'll have more information at that at a later date. So here, I think we got time for about one more question. Give me a second here as I'm picking one that maybe we haven't touched on. Okay, good. Okay, someone's asking about 401k accounts. Yeah, those are a unique one-off. Typically, 401ks aren't going to be following through that traditional profile model we just talked to. That's more for the end client. But if you are working elsewhere and let's say currently managing a 401k, we can go about and bring that under your management with IAMS Wealth Management. That's either as simple as us setting it up under one of the 401ks we already have a selling agreement with, or if it's elsewhere, that it's somewhere where we might not already have a selling agreement, that's an easy switch for us to make. We can make that happen for you. So if you're currently managing a 401k elsewhere, we can help you become the advisor of record on that through IAMS Wealth Management. It's not like you're going to have to leave that behind. Same goes for if you run across an opportunity to start one. I would just always caution anyone new to it. Make sure it's worth your time as an advisor. Obviously, your time is valuable, so make sure whatever you're doing is worth the time you're putting into it. But if you run across an opportunity that is just incredible, you want to start a 401k for a 40, 50 person size firm, we can get you in contact with the correct parties to help you set that up, and that would likely be done through a third-party administrator. And I don't want to get too far into the weeds on how that would work. We currently have some 401ks through John Hancock, Mass Mutual, things like that. but those will be through our institutional partners. So anyone who wants a one-off question on a specific scenario, feel free to chime in with me after this webinar too, and we can get in touch regarding that. So with that, we're kind of getting towards the 50, 55, 60-minute mark, so I don't want to take too much of your time. But I do appreciate you all, again, taking time to be here. Lots of good questions, which I love to see, because that means, well, actually, I guess I don't know if I love to see it. That either means I'm not answering the questions during the presentations, or I'm either captivating the audience and spurring some thoughts. So I'll lean towards the latter and hope that's what I'm doing. So thank you all for being inquisitive. I like that. Me, our IAMS Wealth Management team, we're more than happy to answer follow-up questions. I know either myself or anyone else from our team will be following up with any attendees who might have asked questions, just to make sure we answered those correctly. But with that said, again, thank you. Don't want to take any more of your time. I know it's valuable. If I don't have a chance to speak with the majority of you till the end of the year, happy holidays. Thank you for your time today, and we look forward to talking to you all in the future. Thanks again. Have a good day, everybody.